Welcome to the deep dive. We're here to cut through all that dense corporate reporting, the earnings calls, the 10Qs.
Yeah, it's easy to get swamped trying to figure out what really matters.
Exactly. If you follow companies closely, you know how hard it is to pull out the key signals. We try to give you that clearer lens.
And today, we're doing just that with IDXX Laboratories. We've gone through their Q2 2025 earnings call and the 10Q filing.
Right. IDXX, they're a huge player in pet healthcare diagnostics. So our mission today is pretty straightforward. Distill what really matters from these docs.
We want you to walk away feeling like you've got a real handle on IDXX's performance, their new tech, and where they might be heading.
You might even have a few aha moments, maybe learn something surprising about the business of keeping our pets healthy.
Okay, let's get into it.
All right, so the financial pulse. How did IDXX do in Q2? Their CFO sounded pretty positive, called it another quarter of strong financial results.
Yeah, they certainly did. The headline number, revenue up 11% as reported, looks good.
But you always tell me to look deeper, right, at the organic growth.
Exactly. And organically, revenue was up a very solid 9%. That strips out currency effects and some M&A noise.
So that 9% really reflects the core business strength.
It does. It shows they're growing from their main operations, their existing products, and their newer innovations. It's not just, favorable exchange rates puffing things up.
And it wasn't just revenue. Operating profit saw good growth, too.
Yep, up 14% on a comparable basis. And earnings per share, EPS, hit $3.63 for the quarter. It's a 17% comparable jump.
Those are pretty strong numbers.
They are. Now, we should note the operating profit growth comparison benefited a bit because they lapped a litigation expense from last year's Q2.
Ah, okay. Good context.
But still, even with that, their gross margins expanded nicely, up 110 basis points. That's 1.1% on a comparable basis. They hit 62.6%.
And cash flow, always important.
Very healthy. Free cash flow is about $152 million for the quarter. For the first half of 2025, that adds up to $360 million. That really shows their ability to generate cash, fund R&D, return value.
Okay, so Q2 was strong. How does that translate into their outlook for the full year? Did they raise guidance?
They did, yeah. And that tells you something about their confidence, right?
Yeah.
They're bumping up the full-year revenue outlook by $90 million at the midpoint.
90 million, okay.
So the new range is $4.275 billion to $4.288 billion. Now, part of that is FX helping them. About $70 million of that $90 million bump is from updated currency assumptions.
Okay, so not all operational beat.
Not all. But there's still a $20 million operational improvement baked into that raise. So they do expect the core business to perform slightly better than they thought 3 months ago.
And what does that mean for organic growth for the full year?
They're now guiding to 7% to 9% full-year organic revenue growth, and the EPS outlook gets a nice lift too, up 70.40 cents per share at the midpoint. The new range is $12.47 to 76 cents.
So let's connect the dots here. What does all this really signal about IDXX and the pet health market? What's the big takeaway for you, the listener?
I think it really points to two things. One, the pet healthcare market itself is just remarkably resilient, even when you hear about wider economic worries. People keep spending on their pets. And two, IDX is executing really well within that durable market. They're capturing the demand effectively. It's not just good numbers. It says something fundamental about the industry.
That makes sense. Okay, beyond the financials, what's driving this? Let's talk innovation. Their biggest segment, companion animal group, or CAG. How's that doing?
CAG had a good quarter. Revenue up 10%. And crucially, the recurring diagnostic revenues, think consumables. Tests, they grew nearly 7.5% organically.
And you mentioned innovation adoption is key here.
Absolutely. It's not just selling more of the same old stuff. They're seeing real momentum in vets adopting their newer, more advanced diagnostic tools.
Which brings us to InViewDX. This seems like a really big deal. What exactly is it, and why is it having such an impact?
It really is a game changer for the clinic workflow. IDX called Q2 a record quarter of premium instrument placements, and InViewDX was the main driver.
A record quarter. How many placements?
Almost 2,400 InViewDX instruments just in Q2. That's huge. And it fueled this massive 62% organic growth in their CAG instrument revenues.
Wow, 62%.
Yeah. They're so bullish on it, they raised the full-year placement forecast by 1,000 units. They now expect to place 5,500 InViewDX systems this year, bringing in over $60 million in instrument revenue.
So what makes it so appealing to vets?
It's things like the slide-free intuitive workflow, the fast turnaround time, and the AI-powered analysis giving diagnostic confidence. Think ear cytology, blood morphology. It just makes things easier and faster.
Right, especially if a clinic is maybe short-staffed. Efficiency is key.
Exactly. And they're adding more tests to it, like an
Oh.
FNA test for lumps and bumps later this year. It makes the platform even more valuable.
Okay, so InViewDex is one pillar. What about IDEXX Cancer Dex? That sounds potentially huge too.
It really does. Launched late March in North America through their reference labs,
Okay.
and already over 2,500 vet practices have ordered the test.
2,500 practices already. What does it do?
It's a tool to help detect canine lymphoma earlier. It's designed to be cost-effective and highly sensitive. Lymphoma is a major issue in dogs, so earlier detection could mean, significantly better outcomes.
That's a powerful offering.
And interestingly, they said about 15% of the orders for cancer decks are actually coming from customers who normally use competing labs.
Oh, that is interesting. Shows broad appeal.
Definitely. Suggests it's meeting a real unmet need. They're planning an international rollout for it in 2026.
And they keep adding to their existing platforms too, right? Like
Yeah.
Catalyst?
Yep. They just launched Catalyst Cortisol in North America. Apparently, it was the single most requested test edition from their customers.
Cortisol. So for things like Cushing's disease.
Exactly, Cushing's-Addison's disease. It allows for rapid in-clinic measurement instead of having to send samples out.
Faster diagnosis, faster treatment decisions.
Precisely. And remember, Catalyst Pancreatic Lipase, launched globally last year.
Yeah, for pancreatitis detection.
Right. That one's seen robust adoption. Over 40% of the global Catalyst installed base is already using that test. So they're getting good leverage from adding tests to platforms vets already have.
It's not just the tests and machines, though, is it? Software plays a role, too.
A big role.
Yeah.
They're cloud-based practice information management systems, PMs like EasyVet and Neo.
Yeah.
They're seeing double-digit growth in the number of practices using them, especially clinics with multiple locations.
And that helps streamline the whole practice.
Yeah, scheduling, records, billing, the whole 9 yards. And then there's Velol, their app for pet owners.
What does that do?
It helps clinics engage with pet owners, things like appointment reminders, maybe treatment compliance messages. That saw double-digit growth too. Better communication usually means better adherence to care plans.
Makes sense. And imaging.
Diagnostic imaging is also growing. They've now got over 10,000 imaging systems installed in North America, and crucially, they're integrated into the overall workflow.
So bringing it all together, these innovations, the instruments, the tests, the software, how does this really help you, the listener, or maybe your vet, especially with things like staffing shortages being so common?
Well, it directly impacts the quality and efficiency of care.
Yeah.
Faster, more accurate diagnoses, right? That's better for the pet.
Right.
And for the clinic, it means they can potentially see more patients or just manage their current caseload more effectively, even if they're struggling to find staff. It frees up time, reduces manual steps. It's about better medicine and better practice management.
Okay, that's a really clear connection, but it can't all be positive news, can it? Are there headwinds or challenges they're facing?
No, you're right. It's never completely smooth sailing. They did acknowledge macro and sector headwinds that are impacting parts of the business, specifically that CAG diagnostic recurring revenue line.
Okay, what kind of headwinds?
The big one they called that was U.S. same-store clinical visit growth. That actually declined by 2.5% in Q2.
Visits are down, even with overall revenue up.
Yeah. It suggests maybe frequency of visits is slightly down, or perhaps wellness visits are a bit softer, even if spending per visit might be holding up due to diagnostics and treatments.
Okay. Anything else?
Their rapid assay revenues also declined, down 3% organically.
Why was that?
Mostly because customers are switching to the Catalyst platform for that pancreatic lipase test we talked about earlier. That shift alone was a 5% headwind to rapid assay revenue.
Ah, so innovation cannibalizing older tech. That happens.
It does. It's something they have to manage. But despite these things, like the dip in visits, they stress they remain very confident in the durability of the veterinary market.
Because of?
Well, fundamentals like high pet ownership levels, especially post-pandemic, and importantly, a growing population of aging pets, which naturally require more care. They see these short-term dips, but believe the long-term trend is strong.
So they're playing the long game, and that involves investing, right? You mentioned expanding commercial teams.
Exactly. They see it as making high-return investments. They're planning to add more people on the ground in 3 international markets and also slightly boost the U.S. commercial team.
So more salespeople, more support staff visiting clinics.
Essentially, yes. increasing what they call commercial density in existing markets. The logic is pretty simple. Customers use more diagnostics when we visit them more often.
Makes sense. Build the relationship, explain the new tech.
Right. They expect these new teams to be largely in place by early 2026. It's an investment in driving adoption of their growing portfolio.
And financially, how are they positioned to make these investments while also, managing the business?
Their balance sheet looks really strong. Leverage is low, 0.8 times gross debt to EBITDA, and only 0.6 times if you net out their cash. Very comfortable levels.
Because they have flexibility.
Definitely. They even paid back about $103 million in long-term notes during the quarter.
And what about shareholder returns? Buyback?
Oh yeah, they were active there too. They spent $329 million on share repurchases in Q2 alone. For the first half of the year, that totals $744 million deployed on buybacks. That helped reduce their diluted share count by about 2.7% compared to last year.
So returning significant cash to shareholders. And what about their cash flow generation outlook?
They're maintaining their forecast for free cash flow conversion, that's free cash flow as a percentage of net income, at 80% to 85% for the full year. And capital spending is expected to be around $160 million. Pretty disciplined.
Okay, so let's wrap this up. What's the big picture takeaway for you, the listener, after this deep dive into IDXX?
I think it's clear IDXX is navigating well. They're dealing with some short-term market softness like those U.S. visit trends, but they're not pulling back.
No, seems like they're leaning in.
Exactly. They're leaning into innovation, heavily promoting things like in-view docs and cancer docs, and they're investing in their commercial reach for the long haul. They're using their strong financial position to both invest for future growth and return cash to shareholders now. It's a balanced strategy, really banking on that long-term resilience of pet healthcare.
A solid performance, then, with a clear eye on the future. So we've unpacked IDXX's Q2 2025. We've seen a company growing, innovating, and strategically positioning itself in this really dynamic pet care world.
It's definitely a fascinating space to watch.
Absolutely. Which leads us to a final thought for you to consider.
Given these ongoing, macroeconomic pressures and the shifts we're seeing in vet visit trends, what other kinds of innovations might we see coming down the pike? Not just new diagnostic tests, but maybe things that fundamentally change how vet practices manage their workflow, their patient flow, their resources, especially in the face of staffing challenges.
Something to think about. We'll leave it there for this deep dive.